Welcome back. Well, let's talk more about the commodities market. Crude oil and gold have shown an impressive rally. Have demand fundamentals improved for commodities, or is this a short-term bounce? Jill Malandrino, VOA Channels TV business correspondent in New York City, is joined by Phil Davis, CEO of Pt.2 Investments, with an update.
Made quite the recovery in February, and while low interest rates are good for gold, many traders are scratching their heads regarding crude oil. Phil, supply fundamentals are as weak as ever in the crude market. Was the move purely technical for traders, or do you believe the complex will turn around?
Well, to some extent, we had a bit of an oversold bounce. That was going to happen no matter what. At the same time, you have enough of a shutdown where if you look at the earnings reports of Q1, you have all these E&P companies cutting back their capital expenditures. So they're going to spend a lot less producing oil in 2016. And at the same time, you do have a little bit of noise coming out of OPEC finally, where they're kind of getting together and saying, okay, we're gonna at least put a cap on production.
All right, well, let's switch gears and talk about gold. Do you believe the rally in gold signals that global central bankers will keep interest rates at 0 to negative, or is this a situation where demand is actually improving?
I think it's a little of both there. I mean, obviously the Fed is done with their easing part, but the Bank of Japan is still full steam ahead going easing. The ECB, you've got Draghi telling people he's still going to be easing. So you have a couple of very weak major currencies out there. And also, you still have a lot of fear where the Chinese are going into gold. India is always loving gold, of course, and other countries are starting to pick up. Those gold's getting a little more popular as a hedge against what feels like some coming inflation.
Okay, thank you very much, Phil. In New York, I'm Jill Malandrino for Channels TV.
Well, back here in Africa, South Africa's net gold and foreign exchange reserves were at $40.95 billion in February, up slightly from $40.75 billion in January. Reserve Bank data shows gross reserves rose to $45.7 billion from $45.1 billion. The forward position, which represents the central bank's unsettled or swap transactions, fell to $1.8 billion in February versus $2.05 billion. Meanwhile, South Africa's President Jacob Zuma will begin a two-day state visit to Nigeria on Tuesday, March 8. During the state visit, President Zuma is expected to address the joint session of the National Assembly of Nigeria and will, together with President Buhari, address the South Africa-Nigeria Business Forum. South Africa and Nigeria have good bilateral political, economic, and social relations underpinned by strong historical ties dating back from the years of the liberation struggle. There are more than 120 South African companies doing business in Nigeria in various sectors, including telecommunications, aviation, tourism, banking, property, retail, entertainment, and fast food. Nigeria is South Africa's key trading partner on the continent, providing significant opportunities for its exports and investments. Nigeria is ranked 7th in terms of South Africa's total trade in Africa. And to discuss more about Zuma's visit and Nigeria-South Africa economic relations, I'm being joined by the chairman, Nigeria-South Africa Chamber of Commerce, Mr. Felusho Phillips. Thank you for joining us, Mr. Phillips.
Thank you.
Right. In the last 15 years, we have witnessed a significant growth in South African investment in Nigeria. What factors do you think is responsible for this?
I think first of all, we've created the opportunity in Nigeria in the sense that with a huge market and a very, very fast-growing consumer society, we have opened up our doors to all kinds of opportunities for companies, countries that want to work with us. Secondly, South Africa has displayed a huge level of capability in terms of its technical competence, and in addition, it has been very aggressive in its outward focus in the rest of Africa based on the policies of the Department of Trade and Industry of the South African government. And in the process, South Africa has gotten increasingly comfortable in creating a model for working outside the South African region into other parts of Africa, and has therefore gotten better in doing it. So basically what it is the opportunities in there, and they've responded to this opportunity with great capabilities in the various areas that they've been operating in.
Now, one can also observe that the reverse is not the case. In other words, Nigerian investments are not making the same level of impact in South Africa.
Well, I think, first of all, we've got to try and appreciate that Nigeria itself has made little investment in South Africa itself. I think the major one that we can talk about is Dangote Cement, where it had acquired a cement factory, a cement organization in South Africa for about $378 million. Beyond that, we've got a lot of quiet portfolio investors from people that have invested in various manufacturing organizations or those that have invested in property, and that is getting on a much more personal level. Of course, there's a lot of Nigerians working in South Africa in education and professional services, but generally you find that there's not been any major investments from Nigeria into South Africa. We've got some banks that have tried to set up there, or maybe certainly only have representative offices, because it is very difficult to get into the banking system and the financial services system generally in South Africa. South Africa has very strict controls. The black economic empowerment policies can also be very restrictive, and their banking system is very oligopolistic in nature. So we found that all this put together, it's a case of we've not responded, and at the same time it is tough getting into the bank, into the economic system in South Africa anyway.
Now, Mr. Phillips, what do you think can be done to further boost investment and trade relations between the two countries?
I think we need to understand what our priorities are. Anybody that wants to do business in Nigeria has got to appreciate what's important to Nigeria. We know we talk a lot about infrastructure, we talk about power, we talk about things about boosting agricultural business, and very lately we're focusing on solid minerals. And I think it's important for anybody coming in here to understand that the priority for Nigeria now is import substitution. We want to be able to produce things in Nigeria and not just serve as a market for anybody else from the rest of the world. So I think it's important, first of all, for organizations or countries that are coming into our environment to appreciate the fact that, look, it's about you doing the things that are of value to this country. Secondly, I think that we've always talked about this issue of visas, the ability to move, the freedom of movement from one country to another, and the ease of doing business between both countries to actually help to boost the kind of relationship and investment focus that we require. I think South Africans also need to be educated a lot about the rest of Africa, and even Nigeria specifically, in terms of understanding that in principle we do have a special relationship, a relationship that has come from a lot of effort that Nigeria has made over the years in trying to support South Africa during the apartheid regime, and now that we're trying to push that relationship to be an economically viable one, they need to appreciate that and therefore be a lot more welcoming in their attitude to Nigerians.
Now, Mr. Phillips, before I let you go, one of the major South African investors in Nigeria, MTN, has an issue of fines over $5 billion US. Do you see any diplomatic intervention with a visit of the South African president?
Oh, definitely. I'm sure it's got to be one of the major issues that the president of South Africa will want to discuss. And I'm sure he's going to be making an appeal to the president to try and reduce the fine. We do appreciate the fact that MTN is having his knuckles wrapped a bit. And we do appreciate the fact that South Africa is also very tough on people that contravene its rules. And if the rules were reversed, I wonder what the South African government would do. But the fact still remains that I know it's going to be a major talking point between the two presidents. And really what the country has said is that, look, if we want people to do business with us, we want them to do it in a way that is in line with our rules and regulations. And certainly we have a president who is very tough on things like that. So I'm sure it's going to be a major point of discussion between the two of them.
All right. Thank you for your time, Mr. Phillips. Folusho Phillips, Chairman, Nigeria South Africa Chamber of Commerce. Away from Africa, Chinese Finance Minister Liu Jiwei says the moderate increase in the government deficit is useful in supporting economic structural reform and lighten the financial burdens of enterprises. He made the remarks in response to a query about the increase of financial deficit mentioned in Chinese Premier Government Work Report that the government deficit for 2016 is projected to be 2.18 trillion yuan, an increase of 560 billion yuan over 2015. Liu interpreted the bigger deficit as a means of stabilizing economic growth and promoting structural reform when China's economy stays in the new normal state. He was speaking at a press conference for the fourth session of the 12th National People's Congress.
新常态呢，各方面矛盾呢，都在凸显，包括长期积累的一些矛盾需要解决。
The state of new normal has revealed the contradictions in all aspects, including some deep-seated ones. These contradictions need to be resolved. In such circumstances, we have compiled financial budget in accordance with the guidelines from the central government. The moderate increase in deficit can secure a medium-high economic growth and can facilitate structural reform. The deficit to GDP ratio will increase by 0.6%, and we need to first secure some key expenditures that require us to optimize the spending structure and make arrangements for the spending on the people's livelihood, according to sustainability and security principles. We will strictly control or even cut the three kinds of spending on buying vehicles for official use, the government operational fees, and the reception fees by public servants, so as to make sure that more money is spent on fundamental public services and key areas of people's livelihood.
We'll take another quick break. When we return, we will see what today's trading is like at the FMDQ OTC Securities Exchange market. Do stay with us.